Welcome back to the channel. We are Cosmic, the place where we break down the biggest developments in crypto, digital finance, and the future of the global financial system in a simple and easy way. If you are someone who believes the future of money is changing and you want to stay ahead of the crowd, then you are in the right place. Now let me start this video with something very important. The price of XRP may explode at a time when most people least expect it. History actually proves that this is how XRP moves. The chart shows that XRP often stays quiet for long periods. During those slow periods, many investors lose patience. Some people even start believing that nothing will ever happen. But then suddenly, something big happens. The price jumps quickly, and many people who sold early end up watching from the sidelines. This is not just theory. It has happened multiple times in the history of XRP. The market stays calm, people become bored, sentiment becomes negative, and then out of nowhere, the price makes a massive move upward. And the reason this happens is something called market psychology. Most people in financial markets are emotional. When prices move slowly for months or even years, people start doubting their investment. They start questioning whether they made the right decision. Eventually, some investors give up and sell their positions. But the biggest opportunities in financial markets often appear when people have already lost patience. That is exactly why today we are going to talk about not only what XRP has done in the past, but more importantly, what could be coming in the future. Because right now, behind the scenes, something very interesting is happening in the crypto industry. Governments are discussing regulation, banks are exploring blockchain technology, major financial institutions are preparing to enter this market, and companies like Ripple are positioning themselves right in the middle of this transformation. In today's video, we are going to cover several major developments that could impact XRP in the coming years. We will talk about regulatory progress in the United States, including the discussion around the Clarity Act. Regulation has always been one of the biggest missing pieces for crypto adoption, especially for large financial institutions. We will also talk about what Ripple's CEO Brad Garlinghouse recently said about the future of XRP and the direction the company is heading. In addition to that, we will look at comments from David Schwartz, the Chief Technology Officer of Ripple and one of the main architects behind the XRP ledger. But that's not all. We will also discuss what the Bank for International Settlements has been working on and how some of their financial infrastructure concepts are surprisingly similar to the technology used by the XRP ledger. All of these pieces together help us understand where the industry might be going. And if you truly want to understand the potential of XRP, you have to look beyond just the daily price charts. The real story is happening at the infrastructure level of the financial system. Before we continue, if you enjoy content about Ripple, XRP, and the future of digital finance, do me a quick favor. Type X in the comment section so I know who in this community is paying attention. And of course, don't forget to smash the like button because it really helps the channel grow and allows more people to discover this information. Now that we understand the bigger picture and the potential for XRP to move unexpectedly, we need to look at something that could act as one of the biggest catalysts for the entire crypto industry. That catalyst is regulation. For many years, one of the biggest problems in the crypto market has been uncertainty. Large financial institutions, banks, and traditional investment firms have always been interested in blockchain technology and digital assets. However, most of them have been hesitant to fully participate in the market because the rules were not clearly defined. In other words, they were waiting for regulatory clarity. Recently, an important statement came from the global head of policy at Kraken, one of the largest cryptocurrency exchanges in the world. According to him, the faster the United States creates clear regulations for crypto intermediaries, the faster traditional financial institutions will be able to take advantage of the opportunities in this market. This statement is extremely important because it confirms something many people in the industry have been saying for years. The demand from institutions is already there. The technology already exists. The only missing piece has been clear legal guidelines. When those guidelines arrive, the floodgates could open. Think about it this way. Major banks, hedge funds, and financial firms manage trillions of dollars. Even if a small percentage of that money enters the crypto market, it could dramatically increase liquidity and adoption across the entire industry. The interesting thing is that we are already starting to see signs that this process is beginning. Kraken, for example, has recently been in the news for several major developments. The company has partnered with major financial institutions and has even received access to important banking infrastructure, including what is known as a Fed master account. This type of access connects financial institutions more directly to the U.S. financial system. Why does this matter? Because it shows that Crypto companies are slowly becoming integrated into the traditional financial system rather than remaining separate from it. At the same time, lawmakers in Washington are actively discussing legislation that could bring clarity to the digital asset industry. One of the most talked about proposals right now is the Clarity Act. During a recent banking summit in Washington, policymakers spoke about the importance of creating balanced regulations that both protect the financial system and allow innovation to grow. One of the key messages coming from lawmakers is that compromise will be necessary. No single group will get everything they want, but the goal is to create a framework that allows crypto innovation to develop without threatening financial stability. Interestingly, this is something that Ripple CEO Brad Garlinghouse has been saying for a long time. He often explains that regulation does not need to be perfect. What matters is having clear rules so companies and investors know how to operate legally. Without that clarity, large institutions will always hesitate. But once those rules exist, the situation changes dramatically. Suddenly, banks, payment companies, and financial technology firms can confidently build products using blockchain technology, and that is when the real transformation could begin. However, it is also important to understand that this transition will not happen without resistance. Some of the largest banks in the world are currently considering legal action related to crypto banking licenses being granted to digital asset companies. Major financial giants like Goldman Sachs, JP Morgan, and American Express are reportedly exploring ways to challenge certain regulatory decisions. Why would they do that? Because the rise of crypto companies represents competition. If blockchain technology can move money faster, cheaper, and more efficiently than traditional banking systems, it threatens some of the existing business models in the financial industry. But even with this resistance, many experts believe the growth of the digital asset industry is inevitable. Governments understand that if they restrict innovation too much, companies will simply move to other countries with more supportive regulations. And no major economy wants to lose leadership in the next generation of financial technology. Now that we understand how regulatory clarity could unlock institutional participation in crypto, the next important question is this: what is Ripple doing right now to prepare for that moment? According to Ripple's CEO, Brad Garlinghouse, the company is already positioning itself globally to take advantage of the next phase of financial innovation. Recently, Brad Garlinghouse shared insights from a series of global office visits that took place across several major financial centers around the world. These visits included cities like Dublin, London, Singapore, and Sydney. Along with Ripple's president Monica Long and other members of the leadership team, Garlinghouse traveled to meet employees, partners, and teams who are actively building Ripple's global infrastructure. Why is this important? Because Ripple is not just focusing on one country or one region. Instead, the company is building relationships and expanding its presence across multiple international markets. This global approach is critical in the world of financial technology, where different countries move at different speeds when it comes to regulation and innovation. One of the key messages Garlinghouse shared is that the centers of economic activity are constantly changing. Businesses and innovation are not limited to a single location, and companies that want to succeed must be willing to adapt and expand beyond traditional financial hubs. This is why Ripple has been investing heavily in acquisitions and partnerships. Many new Ripple employees actually joined the company through acquisitions of other financial technology firms, including companies like Hidden Road, Mataco, and several others that specialize in treasury management, institutional trading, and financial infrastructure. These acquisitions are not random. They are part of a bigger strategy. Ripple is trying to build a complete financial ecosystem that supports payments, custody services, liquidity solutions, and treasury management for large institutions. In simple terms, they are creating tools that banks, corporations, and financial service providers can use to move money faster and more efficiently. Another important point Garlinghouse mentioned is something many people underestimate. He explained that adoption of new financial technology does not happen overnight. It takes time for institutions to test systems, evaluate risks, and integrate new platforms into their existing operations. That is why Ripple focuses on building platforms rather than just offering small solutions. Instead of solving only one problem, they want to create infrastructure that financial institutions can rely on for many different services. This approach makes it easier for banks and companies to adopt blockchain technology gradually rather than making sudden dramatic changes. Garlinghouse also highlighted another major trend that is beginning to impact financial services: artificial intelligence. According to Ripple's leadership, AI is already becoming a key component of some of their products. For example, AI tools are being used to help companies forecast cash flow, manage liquidity, and improve decision-making in financial operations. While many people currently think of AI mainly as a productivity tool for employees, the long-term goal is much larger. Artificial intelligence could help automate complex financial processes and improve how institutions manage capital across global markets. But perhaps the most important statement Garlinghouse made was about the future. He explained that the year 2026 is shaping up to be a defining year for Ripple. According to him, the company is now operating in the right markets with the right capabilities across several important areas, including global payments, digital asset custody, liquidity management, and treasury services. All of these components are part of a larger financial transformation that is happening around the world. And one thing Garlinghouse continues to emphasize again and again is that XRP remains at the center of this ecosystem. Some critics say that companies often promote their own products too strongly, but in Ripple's case, the message has remained consistent for many years. The company sees XRP as a key technology that can help connect financial institutions and enable faster settlement of transactions across borders. So as the global financial system continues evolving, Ripple believes XRP could play a central role in the next generation of financial infrastructure. But Ripple's vision does not exist in isolation. In fact, some of the concepts being used in the XRP ledger are very similar to ideas being explored by some of the most powerful financial institutions in the world. One of those institutions is the Bank for International Settlements, often called the Central Bank of Central Banks. And what they are researching could reveal something very interesting about the future of blockchain-based financial systems. Now that we've seen Ripple's global strategy and why 2026 could be a defining year, the next piece of the puzzle is understanding how XRP fits into the broader financial system. This is where things get very interesting. One of the most powerful institutions in global finance, the Bank for International Settlements, BIS, recently released a project called Meridian. This project focuses on creating a system that ensures cross-ledger settlements are atomic, meaning either the entire transaction happens everywhere or it doesn't happen at all. This avoids risk, delays, or partial failures. Here's the key point. The XRP ledger, XRPL, already uses a similar atomic settlement model. What this means is that the technology Ripple built isn't just useful for payments or crypto enthusiasts, it aligns with the same principles that central banks are exploring for global finance. This isn't speculation, it's a practical overlap between Ripple's infrastructure and the way the future of finance is being designed. In simple terms, the XRPL is designed to be a deterministic coordination layer, which allows multiple parties to transact confidently without waiting for long reconciliation periods. For banks and large institutions, this is huge. It reduces operational friction, minimizes risk, and speeds up cross-border payments in ways that traditional systems cannot match. On top of this, the adoption of stablecoins like RLUSD, Ripple's institutional-grade dollar-backed stablecoin, is driving massive activity on the XRPL. Stablecoins provide a reliable digital dollar equivalent for businesses and banks that want to transact digitally but still value a stable currency. This has created tremendous growth in institutional transactions across borders. Let's look at some numbers to understand the scale. Stablecoins are projected to process $33 trillion by 2025, more than twice Visa's annual transaction volume. XRP's network and RLUSD are positioned to capture a significant portion of this activity, especially in cross-border B2B payments. Countries like Turkey and Nigeria are seeing massive demand for digital dollar-denominated assets due to local currency volatility, making these markets particularly important for Ripple's expansion. Another important point, adoption drives utility. As RLUSD and XRP are used more for payments, treasury management, and tokenized assets, the value of the XRP ledger itself increases. It's not just about the price of XRP, it's about the network effect created when financial institutions adopt the ledger for real-world transactions. David Schwartz, CTO of Ripple, recently explained what to look for to measure XRPL's success. First, enterprise adoption must grow. Tokenized treasuries, equities, and stablecoins being traded on-chain. Then, retail adoption naturally follows. The more organizations use XRPL as a common pool of value, the more utility XRP and the ledger itself gain. This adoption trend is what makes 2026 so critical. Ripple is not waiting for the market to develop on its own. They are actively building partnerships, expanding infrastructure, and ensuring XRP is ready for institutional-grade adoption. With global regulation slowly coming into focus, and with banks exploring blockchain for real-world applications, XRP is positioned to benefit from both innovation and clarity in the legal framework. Now that we've explored Ripple's global expansion and how the XRP ledger aligns with global financial systems, it's time to talk about price history and why XRP has the potential to make massive moves again. Understanding the past can give us insights into what might happen in the future. Let's start from the beginning. XRP launched in 2012, and like most cryptocurrencies, it started at an extremely low price, a fraction of a cent. From its early days to its peak in 2018, XRP experienced multiple cycles where it seemed stagnant for months or even years, followed by explosive growth. For example, from its all-time low around 0.07 in 2014, XRP eventually reached highs of $3.66. That's a 1/307 increase, meaning an investment of $100 back then could have grown into over $137,000 at its peak. This is not just luck. It reflects how XRP reacts in cycles driven by adoption, partnerships, regulation, and market sentiment. The pattern is clear. Periods of consolidation, when the price barely moves, are followed by explosive growth. Most investors get frustrated during the slow periods. They think nothing is happening, and some even sell at a loss. But if you step back and look at the broader picture, these boring periods are often when foundational work is happening, partnerships, technology upgrades, and regulatory developments all setting the stage for the next breakout. Another key factor is market psychology. Human behavior in markets is predictable. Fear, doubt, and impatience often drive retail investors to sell during slow phases. Meanwhile, more strategic players, like institutional investors, prepare quietly. When everything aligns, these informed participants create significant upward pressure, often catching casual investors off guard. We also need to consider that XRP is different from traditional assets like stocks. Unlike a company's stock, which depends on revenue, profit, and balance sheets, XRP is a utility token. Its value is driven by adoption, usage, and network activity. As more institutions use XRP for cross-border payments, liquidity management, and stablecoin transactions, demand for XRP naturally grows. This is a structural difference that allows XRP to potentially experience massive growth even when traditional financial metrics may not apply. 2026 is particularly interesting because multiple factors are converging. Regulatory clarity in the United States could unlock trillions in institutional money. Global expansion and partnerships mean Ripple is positioned to handle large-scale adoption. Stablecoins like RLUSD are already increasing transaction volume on the XRP ledger. Technology alignment with central banking concepts adds credibility and practical use. When you combine these elements with historical trends, the potential upside becomes very compelling. Investors who understand these fundamentals can see that XRP's price may not move linearly. It may stay quiet for months, but when the catalysts hit, the price could rise rapidly, similar to past cycles. It's also important to note that XRP's explosive moves are not random. They often coincide with moments when adoption, partnerships, or regulatory developments reach a tipping point. For example, past spikes were fueled by news of major exchanges listing XRP, significant banking partnerships, or updates to the XRP ledger itself. So what should investors focus on? Look at the broader adoption metrics rather than short-term price movements. Number of institutions using the XRP ledger for cross-border payments, growth in RLUSD or other stablecoin activity, regulatory developments in major markets like the United States, Europe, and Asia. When these metrics show progress, it's often a sign that XRP could be entering the next phase of growth. Now that we've explored Ripple's global expansion, XRP's historical price behavior, and the role of regulatory clarity, it's time to look at what the future holds. Specifically, we'll focus on tokenization, ETFs, stablecoins, and how 2026 could be a defining year for XRP and the broader digital asset space. First, let's talk about tokenization. Tokenization is the process of turning real-world assets, like stocks, bonds, real estate, or even currencies, into digital tokens on a blockchain. Larry Fink, CEO of BlackRock, has openly stated that the tokenization of everything is coming. This isn't hype. It's a clear signal that the traditional financial system is moving toward digital programmable assets. Here's where XRP comes in. Ripple's XRP ledger is perfectly suited to support tokenized assets. Its fast settlement times, low transaction costs, and scalable architecture make it an ideal platform for moving value digitally. As tokenization grows, demand for XRP as a liquidity tool and settlement medium will naturally increase. This is a structural factor that could drive long-term growth. Next, we have ETFs and institutional adoption. Exchange-traded funds, ETFs, have historically been a bridge between traditional finance and new asset classes. With crypto ETFs now gaining traction, institutional investors who were previously hesitant can finally gain exposure to digital assets without navigating complex custody or compliance issues. As XRP adoption increases in tokenized financial instruments and ETFs, liquidity and price discovery will improve significantly. Stablecoins like RLUSD also play a crucial role. RLUSD is designed for enterprise-grade transactions and provides a stable, dollar-backed medium for cross-border payments. This reduces risk for institutions, allowing them to use blockchain for high-value transactions confidently. The more these stablecoins are used on the XRP ledger, the more the network grows in transaction volume, utility, and relevance. In short, RLUSD complements XRP and enhances the overall ecosystem. Now, let's tie this back to 2026. According to Ripple's leadership and industry insiders, the year ahead could be transformative. Here's why. Regulatory clarity in the U.S. Once laws and guidelines are set, trillions of dollars in institutional capital could enter the market. XRP, already positioned as a global settlement tool, could be the key beneficiary. Global expansion, Ripple's presence in Dublin, London, Singapore, and Sydney ensures it can serve major financial hubs worldwide, bridging gaps where regulation is clearer or more advanced. Technological alignment with central banks. XRP's atomic settlement model mirrors projects like BIS Meridian, meaning central banks and large institutions could adopt XRP's technology directly. Stablecoin and tokenized asset growth, RLUSD adoption, and tokenized assets on XRPL will increase transaction volume and utility, making XRP central to the digital financial ecosystem. Institutional partnerships, Ripple continues building relationships with banks, payment providers, and enterprise clients, ensuring XRP is deeply embedded in real-world finance. All of these factors together create a perfect storm for XRP. The market may appear quiet at times, but when adoption, regulation, and global infrastructure align, we could see rapid, significant price movements similar to past cycles, but potentially on a much larger scale due to institutional involvement.